12 and 13, how long does that last? If we do have a tame PCE report on Friday, I think we drift lower. We might even break those lows of 12 on the VIX for a continued move to the upside. But watch out if that PCE report comes out a little hotter than expected, and all of a sudden we start pricing in 2 rate cuts or pushing the rate cuts out. Right now we have about a 50-50 chance of a rate cut in June and a 50-50 chance of a rate cut in July, at least based on the Fed Fund futures. Now that's down from 80% that we had priced in for June. So we're a little bit on kind of shaky ground here. One way or the other, we could move. So we'll see how the VIX reacts on Thursday for one, but specifically on Monday. That's going to be key. So I think you might see some action on the VIX on Monday. One thing I find interesting, and now I mentioned that I thought that this chart would relabel. If I go back a little bit, you can see that we had this 5-wave pattern to the downside, and I've been mentioning for weeks now, if you've been watching, that I didn't see the catalyst for rates to go that low. And I felt like that as we continued to move in time, that we would likely see a relabeling of that chart, and that has occurred. You can see that the 5-wave pattern is gone now, and so we're moving in a trading range, which is more like what I thought was going to happen. So kind of called that one as far as the relabeling on the TNX chart here. So just kind of moving in this trading range, and that PCE report on Friday could likely make us move. We have a real small kind of a symmetrical triangle here. But Elliott in his own work said, don't diss the small triangles. They matter too. We always focus on the larger triangles with breakouts, etc. But the small triangles matter, and we do have a small symmetrical triangle here on the TNX. So we're likely going to break one direction or the other, probably not until Thursday or Monday for that to happen. The dollar has moved back up to that 104 range. I do think we're going to probably see a relabeling here. That hasn't happened yet, but we're running out of time. As you can see, these are time and price projection boxes. And this is the legacy software from hub.com. And just so you know, there is a new live version, which we will begin to use here on TradeFinder Live, that you can get for free right now. It's in beta form over at hub.com. If you haven't gone and registered for it, go do so. It's free. And there was some comments you can look on the U.S. market update of people saying that they're loving the new software. So go take a look at that and get yourself a copy of it now. There's nothing to download. It's web-based, and we're going to actually give you a little bit of a preview of it here in this TradeFinder. So make sure you watch throughout the entire show towards the end. But I do think that this is going to relabel here, and we will have live Elliott Wave, by the way. We have live Elliott Wave on the beta form. But the dollar is just breaking or broke below 104 and come right back to it and just staying in that trading range around here. So we have a bit of a trading range on interest rates. We have a bit of a trading range on the dollar. And I think we're going to see some movement on both those fronts next week. But yeah, pretty wild that we have such a big economic report on a holiday. So taking a look at some of our other markets, we look at the Dow, the DIA, had a rough day over our Friday and Monday, rough days, I should say, kind of trying to bounce back a little bit today. Not a whole lot of action going on the Dow. We are managing to stay above the 10-day moving average. It had a pretty good move following that Fed meeting on Wednesday last week as well. But we just are kind of on a almost lower than 45-degree angle now here. So if we got out a protractor, I think that would be less than 45 degrees. Not a whole lot, but a little bit. But we've talked about the fact that towards the end of the year, we had a bit of a more vertical move into the Dow. And that was because I think of market rotation. There were a lot of people, myself included, that thought we would see some weaker economic data in the first quarter, weaker than what we've seen. It's starting to weaken a little bit, but I thought we would have seen that a little bit sooner. We're now at the end of March, so the first quarter is almost over. And the money that wanted to rotate into the Dow has. But we have a renewed bid in some of those big tech stocks, and that's going to hurt the Dow a bit, which I believe is viewed as a more conservative or defensive index. The Qs still in a wave 5 and just kind of hovering around here. Now that interest rate chart, I think, is kind of keeping a lid on the Qs other than just a few stocks. But if that PCE report is weak and showing that inflation is under control, I think we're going to see a big spike in the Qs next week. And then we'll look again to see, can that 5 relabel? So far, it hasn't. The 5 just keeps hopping along with these new highs and is not relabeled into a wave 3 to match what's going on in the S&P and in the Dow. Both of those are in wave 3s. The Qs still stubbornly in a wave 5. They usually kind of match over time. I call this discombobulation, which occurs when they are not in the exact same wave count. The patterns are obviously not going to be ideally similar, but you usually have a similar type of a wave count, even though the patterns could be a little bit different. But normally these will come back in line and start to agree. Even though the patterns may be different a little bit, they'll kind of agree on the wave count. And so something's going to happen here. Question was asked a couple of weeks ago on the U.S. market update, could a wave 3 relabel to a 5? And the answer is yes. Now, when you look at that chart, just eyeballing it, and I'm yet to meet the person that could label charts accurately, consistently by eye. That's why we use software. And this software is programmed exactly to the algorithm as Ralph Nelson Elliott wrote it. There was a comment on, I like the fact that we have comments both agreeing and disagreeing on the U.S. market update. That's what makes markets. If everybody felt the same way, there'd be no markets. We have to have disagreements. And somebody said, I don't agree with your wave counts. The only exception I take to that, fine, if you disagree with the wave counts, is they're not my wave counts. This is the algorithm as Ralph Nelson Elliott himself wrote it. This is programmed exactly to that algorithm. There's a lot of software programs out there that have personal adaptations to the algorithm. So, that if you like that better, whatever. But I like the fact that if I'm going to follow a system, I want to follow it as the person that created the system that's lasted over 100 years. You don't last that long if you don't have a degree of accuracy or a high degree of accuracy. So just once again, these aren't my labels. All I'm doing is doing my best to read the charts as I see them. But those labelings come exactly from the algorithm, not from me. I'm not the one labeling these. I'm nowhere near smart enough to figure out a 40-page mathematical algorithm. That's what the software does. That's why we use software. All right, so taking a look at the IWM, we did go up and hit 210. So we went to the top end of the range that we were in, going way back, where we were between 190 and 210. And then we dropped down, as you know, from 190 to 170. We held 190 here. Now we've gone up and tested 170. Where are the small caps going to go? The Russell, we do have a little bit of a triangle trying to form here. It's not the best formed triangle, but it is at least attempting to form a smaller symmetrical triangle here. So, yeah, I don't know if it's going to happen by the end of this week, but I think we're going to see some volatility at the beginning of next week. Whether it's to the upside or the downside, we don't know. That's what triangles tell us, is something's going to happen, but we don't know which direction it's going to go. Now, the one thing that we do have a good idea on the direction of where it's going is Bitcoin. Holy cow. Look at that move back to the upside that occurred yesterday. We're kind of consolidating in that $70,000 range today. We had a little bit of a pullback. Zach and I have talked about this so many times. What goes vertically up? Zach, I know you're doing multiple things back there. Jump in here and finish that thought. What goes vertically up? What?
Often comes vertically back down.
Exactly. And that's what happened even with Bitcoin. Bitcoin's not immune to that theory or pattern that I talk about so often. So we went vertically up. We had a nice corrective move. We're still in a wave 3 on Bitcoin. Now the algorithm is liking 80,000 plus by the end of the summer. As you know, April 18th is the key day, the halving day of Bitcoin. And it looks like maybe we're going to try to take a run at moving higher above the 70,000 range even before April 18th. We had gotten below the 10-day moving average, but we're back above it and consolidating that move nicely today. Not a whole lot of give back, just going sideways. And then look at Coinbase. As you know, we always kind of just pair those two together. And Coinbase is not only dealing with Bitcoin, but all the altcoins and everything else that goes along in the world of cryptocurrencies. Same thing here, a little bit of a correction with Bitcoin moving higher. Now, unlike Bitcoin, that has not taken out that wave 3 high yet, Coinbase has. If we look at the 10-day moving average, we got a little bit overbought here yesterday. Also, some nice consolidation going on today. It's holding the gain so far, and the algorithm likes a price around 340. Just as a quick reminder, this does not mean that the wave 4 is underway. These are projections. Just to give you an idea, if the wave 4 were to start, that's where you could expect some support before a move higher. But as long as you're in the wave 3, the algorithm likes this price, and that can occur either after a correction in the wave 4 and then a move higher, or if we have an extended wave 3, it can move to that price. So it does look like at some point in the future, we're going to see 340 on Coinbase. Now, is it sooner rather than later? That we don't know, but we can identify the fact that at some point 340 is probably going to show up on Coinbase. So that's a way to get into the whole crypto world if you're not interested in spending $70,000 for a Bitcoin, etc. Now you know you have the ETFs to trade as well. Let's look at a few of the international markets, update you there before we get into our case studies. You can see that we have Australia in the international world. Another nice triangle here, right above 24. That was the key level. We had a lot of resistance there. We had an ascending triangle just below 24 that we talked about. If we put the Elliott Wave pattern on, you can see that we were in that wave 4 correction at the lower end of that ascending triangle. We broke out. If you've been following us, you know the rules. When triangles break out, they break out multiple different ways, but they oftentimes, high percentage of the time, come back and test the breakout. And that's exactly what the EWA has done. Now, what's interesting here is not only have we come down and tested the breakout, we formed another triangle. And that tells you that there's a lot of indecision in the Aussie market as far as where things are going to go. So a breakout and then followed by a symmetrical triangle. You see it, but this isn't a common pattern that occurs, that you go through consolidation in a triangle and then break out and move into another triangle. It does happen, clearly, because we're looking at one right now, but it's not something that occurs oftentimes. So I find this really interesting. Part of the reason that I really enjoy trading. You always see things that make you go, huh. Hey, I think that was a song, isn't it? Things that make you go, hmm. Anyway, that's showing my age, I think, a little bit there. But if we take a look at Canada on the EWC, we can see that up north, our friends up north are kind of following along with what we're doing here. Nice move to the upside, but they are in a wave 5. A little bit of a triangle here, too. You could make an argument here, and people comment all the time of, oh, I don't like your trend lines. Your trend lines are messy. Okay, well, maybe. But, they don't have to be exact. You're just trying to get a general idea of what's going on. Now, if you wanted to call this a symmetrical triangle, or if you wanted to call this a descending triangle, I wouldn't argue with either one of those. But does it really matter? They're both the exact same thing. They both mean consolidation. And likely some sort of a breakout move. So, my attempt is not to make the lines exact. I don't really care about that. I just want a general idea of what the pattern is showing. And it's showing that we got some indecision here in Canada as well, just kind of similar to what occurred in the EWA, where we had the ascending triangle. We broke out. Now, the difference between the two is that the EWC has not come back down and tested the breakout of that ascending triangle the way the EWA did. So that's the only difference. Other than that, they're quite similar. And we got to look at Germany, right? Because that was just, it's even been talked about on the financial networks. And I've made the comment, what in the world is going on in Germany? For a long time, it seemed like for a couple years, all we had was just continued downward movements here on the EWG. We just kept having Elliott Wave patterns just set up, and the 5 would relabel to a 3, and we go lower and lower and lower. And then all of a sudden, we had a big move to the upside that started in October. Notice that it started in October back in 2022 as well. What's with October in Germany? Just, silly things to think about and discuss. But we've had bottoms the last 2 years in October in Germany, followed by big runs to the upside. I don't know, maybe you file that away and keep an eye on that next year. But now you can see that we are continuing to the upside here. Once again, a small triangle. In this case, a small descending triangle. This really furthers my point where I say that you can take a look on the internet and you will find that people say descending triangles break down, ascending triangles break up, symmetrical triangles break either way. I've done, I think, as much research on triangles as anyone out there in the world of trading, and I can tell you that the information does not support that. Triangles are triangles. They can break either direction. And in this case, the descending triangle on the EWG broke to the upside. So there's proof right there that they can go either way. But continuing that wave 5 to the upside here on the EWG, probably one of the best performing international markets right now. And if we look at the INDA, which finally took a little bit of a breather, it looks like it wants to turn and move back to the upside. I commented in the U.S. market update that we wanted to hold this wave 3 high. If you're long the INDA and you want to see this continue higher, you need to hold that level. Otherwise, it means we're coming down to the previous 4, because that's Elliott Wave rules. When a wave 5 extends less than 100%, when you correct and the wave 5 ends, which it has not yet, it's still green. That means it's still currently in effect. But if that shows that it's over, then you get a correction back to the previous 4. But for now, we have held the wave 3 high. We're trying to bounce back to the upside. We look at the moving averages. We're just eking back above that 10-day moving average. So maybe we're ready for another run in the INDA. I think I would be a little cautious here on that, because if we do draw that support line there at the wave 3, you can see a little bit of a descending triangle here as well. Today, trying to break to the upside, but as you know, another one of our rules, one day doesn't mean a thing. You have to have follow-through confirmation. So we'll see how that trades the next couple of days if we are breaking back and running higher on the INDA. So that covers off all of the U.S. markets and the international markets, a little bit of what's going on. And just a reminder that Thursday is going to be something to watch, I think. Maybe I'm wrong there. Maybe it is a nothing day, but I just can't imagine that. But the market surprises me all the time, so that would be no big deal either. All right, so let's take a look at some of our case study considerations that we've looked at here on previous TradeFinders. And we start off with RGEN. We looked at that one back on the 6th of February, and this is going to be rare. This is going to be a rare one that's going to turn out to be likely a loser. I wanted to see us get back above 200 at this point in time. We are just barely hanging on right here at that wave 3 high. So I'm disappointed that we broke down yesterday below that 200 level. It's going to be hard to imagine that we move higher, but we're exactly where we just talked about with the INDA holding that wave 3 high. So this is very close to the point where you would just take this off, take the loss, and move on. But let's see if it can hold this wave 3 high. And if not, then we go ahead and take that one off. On MOH here, we looked at this, and I just wanted to show you on the new website, which is really cool. We actually have a place where we post these. And not only do we have the on the new website, the live Elliott Wave, etc., we also have, and I'm going to switch the window here so that you can see it. We also have an area where you can post your own ideas. This is the TradeFinder website here, and you can see the level of all the postings here. And right down here is MOH. These are the closed ideas, and you can see the record is pretty darn good. So RGEN would definitely be an outlier. But you can click on it and see that we thought it was going to go to 420, and then it did. And so we posted the close. Look, we hit 420, exactly where we thought it was going to go. So really some cool features on this new software. So once again, if you haven't gone to hub.com and gotten a free beta copy of this, do so. You can post your own ideas. So you can see where it's my ideas. These are from the TradeFinder that we post, or you can post your own, and other people can look at your ideas and vote on it. It's just a great community. You saw Reddit came out, and Reddit went public, and it's had a great valuation. This is an area where people really love, and we have it included within a software program that has live Elliott Wave. So I would argue that this is even better than Reddit, whatever. And we have all the economic news, everything else here. So that's how powerful the software program is. So once again, go get yourself a copy of it. Now I'm going to go ahead and switch over to one of our trade alerts that we have here on Ewo Trader, just to show you the difference at ewotrader.com for our alert subscribers. We don't just give you the idea and then take a look at oops, let me switch it over. Make sure I get to the right screen there. We give you an idea, and then we give you a walkthrough. We send you out alerts on entries, exits, and any adjustments that might be made. I guess I have to actually bring the chart up first so that I can switch over to that screen. My apologies here. Hang in there with me, and we'll get there. But I do want to show you this because it is really important as far as what we do at Ewo Trader Live. So there we go. Now you can see it. This was on JWN. And the cool thing about this is it was a butterfly, and it generated a 50% gain in 4 days. Now, normally on a butterfly, you need time to go by. You're looking to profit from time decay. You're looking to profit from a volatility drop, etc. But in this case, we had just a slight bias here on JWN. As you can see from the chart here, we had moved to the downside. We thought we might bounce a little bit off that support level, which is exactly what happened. And that's one of the neat things about butterflies is you don't have to make them exactly directional. You can kind of give them a little bit of a directional bias, which is what we did. You can see it bounced back off that support level. And that, in addition to a few days of time decay, allowed us to generate 50% in just 4 days. So at ewotrader.com, we give you alerts on entries, any adjustments, and exits. So lots of things for you to choose from in your world of trading. So let's go ahead and get back to the charts and continue to update you on the previous case studies that we've looked at here on TradeFinder. And we'll move on to taking a look at ROL, which is the last one that we posted. If we move over here, we looked at that one last week, and we had a target price of 49. Maybe that this wave 5 would extend. At this point in time, it's kind of going the wrong way. But, we had a pretty nice run, and we'll keep an eye on this one and see how it performs as well. But when we see that, we want to see what the DMI is showing us. The DMI looks strong. It is rolling over a bit, so we'll want to keep an eye on this one and see if that one can turn around and continue to the upside. This may be following suit with the others that we've talked about and come down and test that wave 3. When you have extended waves, oftentimes they will come back and test the previous fib level before moving to the extension. That could be what's going on here. That's where patience comes in and allowing the patterns to play themselves out. So all those things that we want to talk about. All right, so with that, let's go ahead and see if we can find ourselves a case study consideration for this week's TradeFinder, and we're going to show you exactly how to post it or how we post them, and you can see what you can do as well. When I look at the impulse search, we only have 2 candidates here. We have Stride and Assurant, and so let's take a look at the charts and see. As you know, if you've been watching, I don't pre-look at these charts. I think it's more educational if we do it all together and kind of just verbalize the thought process. Now we look at the fact that we had a wave 4 that went just past the 38.2% level, almost to a 50% correction. You can see that we're right here around resistance. And doesn't this look familiar from what we've looked at with the international markets with this ascending triangle pattern? Are we going to break to the upside here? We might. If we do, we have a price up around 75 plus, maybe even as high as 78. So when I see this, one thing that I will look at to see what is the likelihood that we're going to break higher or not. Because remember, I told you triangles can break either direction. I like to look at the DMI. It's my favorite indicator as far as strength of a move. Now, we have this move up here within the triangle, and the ADX is moving up, and the positive directional indicator is moving up. That would lead you to believe that we're going to have an upside breakout. But I just want to be really clear here at this point in time, that would be speculative. We need to see the actual break above it first to see if that occurs. Now, the wave 3 is way up here with that odd day that we had. We're ignoring that for now and just looking at this resistance area here around 65 and then this set of higher lows creating that ascending triangle. So the DMI is kind of saying, hey, we think this one is going to break to the upside. Not really saying that, to be clear. It's saying that this move has strength. So this upward move has strength, and maybe we break to the upside out of this triangle. Well, let's see what the other one looks like and see if that has something that might be just a little clearer here on AIZ. I do like this area here as far as being slightly defensive. I like this pattern better too because this one has already broken above that wave 3 high. We've looked at this stock in the past. And so we broke out, filled the gap. Another one of the rules that we talk about, gaps get filled. You never know exactly when. Sometimes they get filled quickly like this. Other times it takes time. But in this case, we're moving here a little bit to the upside. And that is exactly what we want to see. I look at the 10-day moving average. We tapped it on the low today and moving higher. Actually, let's see what AIZ is currently here. That's a few days ago. They must have changed. There we go. They must have changed their market. So let's see where AIZ is actually trading now. Did they move to the Nasdaq? Is that where we are now? And we click here. Yeah, maybe it moved to the Amex. Let's see if it's over on the Amex now. That would be unusual for one to move there, but that's exactly what happened. So there's the current price. And in fact, I like this even better now. So AIZ has moved to the Amex, but the ADX doesn't look as good. Gosh, that's difficult. Sure like the pattern, but would rather see a little more conviction out of the DMI. So neither one of these are ideal. So we look at this with the potential to move up. And what I'm looking at here on the DMI, if you're not familiar, you want that. I like the fact that the ADX is curling up, but you want to see it break above that negative directional indicator. It is above 20, so that's good, but it's still below the negative directional indicator. That may change at the close today, so we'll have to wait and see if we can break higher. That one, I think, goes on the watch list, so I'm going to put that on the watch list. And so to make sure that we have one to place as an idea for today, we're going to go ahead and be a little speculative today. Now, this is not something that I would do in the alert service because we want to make sure all the rules are completely followed there. We have a set of rules. You can find them on our website. Tells you exactly what we are looking for. We do have a speculative portfolio for ideas like this. So if this was something that I wanted to send out as an alert to our subscribers, it would go in the speculative portfolio because it doesn't follow all of the rules. And the reason I'm saying that is even though we have the DMI suggesting an upside breakout, it's still a triangle. And it wouldn't go in our volatility portfolio, which is for triangles because the ADX is too high. One of my rules there when we posted one earlier today is a low ADX. I just thought I'd just give you an idea real quick here on CNC. This is a triangle that we posted on our volatility portfolio for alert subscribers here. You can see a really nice symmetrical triangle, but notice the difference here. When I put the DMI on, you're going to see that you have a very low ADX. That's one of my rules. So that tells you that this is likely to break out. That's why I like the low ADX. It tells you it's been consolidating. The longer it consolidates, the more likelihood it's going to break out. No guarantee. There's no guarantees in the world of trading, but those are some of the rules that I like to look at. So that was sent out. This one, we don't have the movement here on AIXZ, and we have still the triangle pattern here. So for this to go out as a directional alert, I would want to see it break above 65. To go out as a volatility alert, I would have to have a lower ADX. So speculation here on this one. So I just want to be really clear on this. If you want to follow along, this is a speculative move that we are going to break to the upside. We're going to trust the DMI here, but again, nothing's 100%. So when we look at this, how far can it go? You measure the mouth of the triangle. So if we look from 65 to 55, that's about a 10-point move. And isn't that interesting that if we break 10 points from 65, guess where we are? 75, which is the lower end of that wave 5 tap box. So that kind of coincides a little bit. So if it does break to the upside, and I highlight that word if it does break to the upside, we could look for about a 10-point move. So that's going to be the official case study consideration for this week, which is on symbol LRN for stride, and that we are going to break to the upside towards 75. So I'm putting a little bit of an asterisk here because that one leans a little bit on the speculative side. But I just want to make sure that we have something that's official for this week. So that's that. And Zach, if you want to show the folks how to post something, I'll let you take the screen. Otherwise, we can do that at the end if you want to do questions first, whatever you want. I know you're the one that's got 9,000 things going on behind the scenes there.
No, not 9,000, just about 8,999. So anyhow, let's go over to the platform here. And I think it's good just to go ahead and start out by showing everyone real quick how to post on the platform and the overall process for what we've been doing over time. I won't spend too much time going in detail on the idea, so we can get back over to the Q&A with the time remaining. I did want to confirm with you, though, Rob, with it being a speculative trade here on LRN, would you like this to be an idea or a post?
Let's do this one as a post.
A post, yeah, okay, that's what I thought you might say. And so this is a good example, actually. for all of our subscribers watching and for anyone that might be viewing the recording, when Rob posts an idea, that is basically a vote of confidence that this is something that he would either send out possibly as an alert or trade himself. Whereas a post would be a bit more speculative. The criteria is not really matched up to what he needs in all of the technical analysis that we know Rob conducts. So a post would be a bit more of a speculative pre-entry type method. So Rob, I'll let you just give me a quick one-liner here on both, and I'll come back and add some detail and make it pretty after the session.
Sure. So it's going to be on symbol LRN, and the commentary would be LRN is currently in an ascending triangle, bumping up against resistance at 65. The DMI suggests an upward breakout, which should give us a target price around 75. If I went too fast, I can redo some of that. You got it? Okay, good.
So, yep, we will come back and you will be able to see that on the platform after this session is over. I will finish it up there. I just wanted to make sure I got what Rob was saying there for that idea. So let's go over to some questions now and get started with this first one here. We got a question, more of a comment, or it's a question from Pete saying, Zach is Tom Gentile's son, and I am not Tom Gentile's son. So that's the answer to that one. Next over, we will go to a question from SP. Would you review PLTR on the daily, please?
Sure, absolutely. Talking about that, and I was joking that, a lot of people talk about the whole Chuck Norris thing, and then somebody posted, you look like Chuck Norris's son, which I liked better. But I have another Chuck Norris story. When I was at a convenience store, there was a guy in front of me, and he stopped and looked at me, and he goes, "You look just like Chuck Norris." And he goes, "You hear that all the time, right?" And I was like, "Yeah, I do. I hear that all the time." And then he started to walk away, and he stopped and turned around and came back and said, "I just can't get over it. You look just like him." So anyway, I like the idea of Chuck Norris's son better. So now we have Chuck Norris's son and Tom Gentile's son here. So
I think Chuck Norris has a better ring to it as well.
So PLTR, nice consolidation here around the wave 4. We do have the ADX moving lower, which you would expect during a consolidation. What I like about this is it's held in this area here pretty well. Now, there was another vertical breakout. Those always make me nervous. And I think you have to keep that in the back of your mind. But at least so far, it's held in this 23-24 range. It looks like it wants to try to break higher from here, trading right at the 10-day moving average over the past, 4 days. It's been sitting there, slight bias to the upside here on the positive directional indicator being above the negative, but not dramatically so. You could also say that other than that outlier there where we got a little bit overbought, we've been in pretty much a range here between 24 and 26 since the beginning of February, following that big vertical move. But again, this would have to be on the speculative side of an upside breakout. This one's pretty easy, though, from a risk to reward standpoint. Remember, I always like to give both aggressive and conservative views. We all have different risk tolerances. You know what yours is. If you are aggressive minded, I think you could take a shot long here, understanding that that's an aggressive move. If you're more conservative, let it break one of these two trend lines. So if it breaks above 25 here, I think that's a clear signal to go long, and I think you'll see that ADX turn. However, if it breaks below this level here at 23, because of that vertical move and the gap that exists down here, that could be a really good short. So if you like this one and you're a little more conservative minded, let it show you a break of one of these two trend lines here and then trade it directionally from there. So that's the more conservative view. If you are aggressive minded and you like the story, I think you could take a shot long here and see how things play out. Now, understand that that's a big report that's coming out on Friday, and everything could change Monday. But we can't we can't trade on what we think is going to happen Monday, right? We trade on the data that we have at the given time. So that's the beauty of Elliott Wave, by the way. And some people say negative things about Elliott Wave because of the relabeling that occurs. I think that's one of the most positive things about Elliott Wave. The market's not static. The market changes. It's dynamic. And you better have an indicator that's as dynamic as the market is. And that's what Elliott Wave is. All right. Anyway, sorry. Got off on a tangent, Zach. Back to the questions.
No worries. We always love Rob's tangents. Let's go over to ARK. Usually is a big mover, and Will says it's an interesting triangle there on ARKK.
ARKK. Okay, that's what I thought as soon as I finished typing it in. All right. Well, we all know about this fund and Kathy Wood, et cetera. And she's extremely aggressive in the stocks that she has in this fund. We've gone through a very long consolidation here. You can see how low the ADX is. The ADX is way down there below 12, probably in the 10 area. Not quite to 10, but around 11. That's a low. Anytime the ADX is below 13, that's extremely low. And so lots of consolidation here. And there's a big, huge triangle right here. And perhaps that's what's being looked at. Since it's an ETF like this, I don't know about a strangle here, but possibly because it's a pretty large triangle. And this could give you, this is a great suggestion here to look at. Again, I have to look at the pricing of the options, but this could give you a way to play either direction. Again, looking at a strangle of what happens after that PCE report comes out on Friday, and this will move the markets. By the way, if it comes in and it's weaker, and we are comfortable with at least 3 rate cuts this year, the market probably goes higher. But if that shows that inflation is still stubbornly high, and we start pricing in less rate cuts this year, that's going to be a negative for the market. So I really do think this is going to be a market moving event on Friday. And specifically for these high beta names, which are what are included in the ARK Innovation Fund. So from that standpoint, putting a strangle there kind of covers you no matter what happens on Friday and going into next week. So from that standpoint, I like the idea. But remember, there's 2 pieces to putting on a trade. You have the technical side and you have the option side. Now, there was a time when the options on ARK were very juiced, and that means that the IV is high. And when you get a breakout and you already have a high IV, then it really doesn't perform as well. You need lower IV when you're putting on a strangle so that when the break occurs, you can possibly get an IV rush. You don't need it because the math between delta and gamma works well on the way we construct strangles. We construct them with the highest ratio of delta to gamma, not just one strike out of the money like you'll read on the internet for a strangle. We do them differently. It's kind of my claim to fame in the world of options. But from this standpoint, if the options are fairly priced, I like the idea of a strangle here. Put it a little further out in time than normal. Normally we go in the 60 to 90 day range. You might want to lean a little bit to that 90 time frame. Again, I don't know what the options look like or what months are available here, but from a general standpoint, that could give you coverage no matter what happens next week. So good one to look at, Zach. So let's go again.
All righty. Well, we'll keep the good ones coming through here. We talked about this on yesterday's EWO Trader Live, and I'm excited to bring it up again. Good old Boeing.
Yeah, we joked about yesterday how Boeing was trying to have a little bit of a bid because the CEO is resigning at the end of the year. That's never a good thing for your stock to go up when the CEO resigns, but with all the problems that they've had, certainly understandable. And we talked about yesterday, we had already had a bit of a bounce. You could see a continuation up to 200, but I don't know that we go much further than that. So that tradable bounce has occurred already. And we'll have to see if Boeing can make it above 200. If it can, then, if you feel like the story here, now I said the same thing at 200 though. So, I pat myself on the back when I'm right. So I have to come out and, take the medicine when you're wrong. We did have a descending triangle here and it broke to the downside, but I did make the comments. What else could come out negative about Boeing? What other negative news could there be? And lo and behold, you've brought it up a few times, Zach, of what's occurred there. We don't need to get into that, but there was more bearish news to come out, and it came down and it held 180, which was where it had to hold. That was the last bastion of support before old Katie bar the door incident occurred. So at least so far it has. If you're a believer in the Boeing story long term and that they're going to get their act together, they're going to fix the problems, I still think you want to see a break above 200 before you go long here, because I'm not going to come out and say what other bad news could come out. I already got burned on that once. So I think you want to keep an eye on this one. You can see it's trading at the low of the day currently. And that's not what you want to see. It is holding the 10-day moving average, but for Boeing, I think this could be a great long if it breaks back above 200. So if it can break above 200 with a follow through, I think that could be a good longer term. I mentioned his name a lot. Pankaj is one of our longtime subscribers at Evo Trader. He's always looking for elite candidates. What do you think could be good for the long term? And I think Boeing could be one of those. But I still want to see a break above 200 first. And then I think longer term, this could be a place to be. But let's get above 200.
Well, we know the primary purpose behind these sessions is obviously to get the invaluable insight from you, and of course to be an educational platform. But we like to add in our humor every now and then. And I just wanted to pass through a comment that came through the chat from Gary saying for BA for Boeing it should be Katie bolt the door instead of Katie bar the door. And I think I have to fall into that camp as well.
No, I love that. And, life is tough enough. Life is serious enough. Trading is hard enough. You got to inject humor, and we like to do that here. So love those kind of comments. That's fantastic. No, we welcome those kind of comments. If you can't laugh through life, then what's the point? So,
very well
we
said,
all have
challenges.
Yeah, that's
Airbus
awesome.
allegiance
Anyway,
is how we'll wrap that up. Let's go over to Dollar Tree.
Dollar Tree. Let's see how this space. You would think if you were looking for something that was a bit on the conservative side, and I talked again about what happened on the DIA at the end of the year. Look at this move. We had a vertical move in the DIA. We had a better than 45-degree move up in Dollar Tree. This is where money was going. A lot of people, again, including myself, thought we would see weaker economic data at the beginning of the year. It didn't materialize. So, a disappointment here on DLTR. And that's because the economy is just not bad enough yet to where everyone's going to the discounters. The consumer's still somehow finding a way to spend, even with all the debt that we have. And you can see on the earnings that it had a big drop. So trading through here, going dead sideways, looking at this right through here, you can see that it's kind of building a little bit, maybe, of that launchpad effect that we talk about, again, being from the Space Coast, but it also is in the realm of, like a time strategy candidate where after a stock has a big drop, they tend to go sideways like this. So far, this one's doing that, and we'll have to see how long it does. It's also right at that 61.8% fib corrective level. I do think that Dollar Tree catches a bid once the data becomes even weaker from the economy. So I think you could keep an eye on this one and look at this as a potential, again, longer term, kind of like Boeing, maybe a longer term. I do still believe that we are going to see a recession here. I know that's not the prevailing wisdom from all the talking heads that are out there. I still believe that the Fed is going to be a little conservative on cutting rates. I could be wrong. I'm wrong a lot. So you got to admit when you're wrong. But I feel like they're going to be a little late. I think they'd rather be late than early on cutting rates, and that they will allow the economy to weaken a bit more before they begin to cut rates. I think from the longer term, you could take a shot here. I don't see too much of a catalyst to drive this lower unless I'm 100% wrong. That PCE report comes in super weak, and the Fed feels confident in cutting rates sooner, and the Fed fund futures are starting to price it in, and all the big tech stocks take off. That'll take away a bid from a stock like Dollar Tree, and perhaps we break down from that launchpad setup. So there is a little bit of risk here, but I feel like at some point down the road, this stock will recatch a bid if I'm right on the recession. So if you're not in the recession camp, then you disagree with what I just said, and you don't want to do anything. Just want to watch this and let it make its break. But if you are a believer in a recession, this is a good time to get into a stock like this that's just gotten crushed like that on the previous earnings report. So lots to talk about there on Dollar Tree. All right, keep going, Zach, because I've been chattering here and we're running out of time.
Yeah, no worries. I was going to say, since we're coming up on the hour, we got time for one more symbol and then finish on a conceptual question.
Okay.
All right, sounds great. Let's go ahead and head over to NEO. We haven't looked at that one in a while.
No, we haven't. And, it's BYD, which is claiming all of the interest in China now. And that's why you're wondering, I've talked about this a lot, where China is really getting very, not protectionist, but very tied to Chinese EV stocks, hurting Tesla, etc. And you're like, well, why isn't NEO catching a bid then? Well, BYD has all the interest in China because they've figured out a way to price their EVs way below the market. And there's fear. I've been reading about this a lot. There's fear that once that car comes over here to the U.S., it's going to really hurt the U.S. EV automakers because the cars are so inexpensive, priced right around $10,000 US, if you can believe that, for an electric vehicle. And there was a kind of like a Consumer Reports, but it's not Consumer Reports, but an independent company that literally took the car apart and said, you know what? It's surprisingly well engineered. So you got a car coming over. They're only made, the margins are super thin, but they are able to break even to a slight profit with all that. So that's why NEO hasn't caught a bid yet. All the interest is in that car, BYD. So looking here, the breakdown, we're at ground zero here. We got to hold 5. You all know about, we've talked about this so often, about the price levels 5 and 10 being meaningful from an institutional standpoint. To own a stock between 5 and 10 single digits, you have to have aggressive growth as your investment objective. When you get above 10, anything that has an investment objective of growth and income, etc., can own those stocks. So those are the two key levels, 5 and 10. Now, if it breaks below 5, it gets really dangerous because that means all the aggressive funds that may own this stock have to sell. And then that pushes it down, and then you get down to the dollar and you start looking at a movement to the pink sheets, etc. Is all that going to happen to NEO? I wouldn't think so. I would think that it's going to try to hold 5 here, but I really have no idea. It did its best to hold 6, and it couldn't do it. You can see that here mid-March, it tried to break above 6, and it's down here. And it's just, as I said, just not the vogue name, even in China anymore. So you got to watch this 5 level. If you wanted to take a super speculative shot here, you might get a bounce from 5 back to 6, but there's so much resistance at 6, you'd have to take your profits there. And your stop would be easy here. If it breaks below 5 with a follow-through day, you're out. So you could look for a speculative tradable bounce here, but again, I would exit that at 6 and then wait and see if it can get above it. If it can get above 6, then it probably goes back to 7 pretty easily. But this one's just stair-stepping its way down. It held at 7, tried to break up, couldn't, broke down to 6, tried to break up, couldn't, and now we're at 5. So those are your steps there on NEO, and that's kind of what's going on there.
Awesome. Very well, Rob. That's a deep breath of a chart to look at, I'd say. But I wanted to save this last question here, this conceptual question. I think is a good one to wrap things up on, especially for any of those that might be wondering the same question. That's the beauty of this Q&A process, right? Is that sometimes we always have such well-informed questions coming through, well thought out questions from our informed subscriber base, rather. And sometimes people ask a question where you hadn't even thought of that, and now you want to know the answer. And so anyhow, just thought this one would be a good one to wrap things up with. Maria says, can Rob define what the overall topic of follow through and confirmation is?
Okay, so the market has a lot of head fakes. When you have a triangle, you have a major moving average, you have a support resistance line, oftentimes the market will break out of that. And people look at that, and of course the desire is always to get in early, right? And people will jump when they see a breakout of a triangle, or they break the major moving average, or consolidation, support resistance, etc. And then the market will reverse, and it becomes a head fake, and people get sucked in to that first break, and then it reverses, and the move ends up being the other way. That's why you want to see 2 consecutive days. So if you have a break to the upside, you want to break out from one of those things I just talked about, and then you want the next day to be a higher close than the previous day. It can't just trade above the high. It has to close above the previous day's high. So you need 2 consecutive days in the direction that the move is going to be, because oftentimes you'll see a one-day move and then a reversal. And again, that's sucking people in and getting caught in whipsaw, that we call it, because the market gives a lot of head fakes. And, the market is notorious for that. So it's very important that you see that second consecutive day. That's the follow-through day, or the confirmation day, however you want to view it, that, hey, this is really a breakout. We really are breaking this. This isn't a head fake. So it's the distinction between a legit break move versus a head fake type move. So, yeah, that was a good one, Zach. Well done on your choice of questions and comments today. Love this live show. Love having it live. Again, we will be using that live version of the software in the future, so make sure you go get it. You've seen some of the really cool features of it. We didn't even talk about the charting features or anything. You all know about that with live Elliott Wave, etc. We're talking about the community aspect. And aren't you curious that if you have an idea what other people think of it, it's just really cool. So thanks for all your work, Zach. I know you multitask back there. I only have one task to look at charts, but appreciate you as always. And thanks for watching, everybody. Keep an eye on Thursday. I want to see what happens Thursday. And then we know Monday is going to be wild, whether it's up or down. But interesting rest of the week. And enjoy your holiday weekend, everybody. Take care. Look forward to seeing you soon.
Take care.